There are two types of control account. Number one, sales ledger control account, and number two, purchase ledger control account. These topics are very common in exam. So here in this lesson, I'll show you how to prepare sales ledger control account. And in the next part, you will also learn how to prepare purchase ledger control account. To explain these control accounts, I will take a question from 2023 RJCC accounting past paper. So before we start, let us have a look at the question. Lucas is a trader. He has provided the following information. So here we see balances at 1st January 2023. Sales ledger control account balances. We have also purchase ledger control account balances. And there are other related items, okay? So here all the items, purchase ledger control account related items and sales ledger control account related items are given together. So this will be confusing to many students to classify which one will appear on the purchase ledger, which one will appear on the sales ledger control account, okay? So here, if you understand this tutorial, I hope you will never make mistake to prepare a control account. Okay, so here first of all we will know what is control account actually, what we do here. So sales ledger control account, it is actually debtors ledger control account, okay, or you can say trade receivables control account, okay. So trade receivables are also called accounts receivable. So what is accounts receivable? So here we see accounts receivables are the payment which the company will receive from its customer for goods sold, okay. So here we see two keywords. Number one here, customer, and goods sold. So this means if you have customer related items on the question or sales related items on the question, you will take on the sales ledger control account, okay. So trade receivable or accounts receivable, this is a current asset, okay. So here we will discuss about purchase ledger control account later. First of all, we will prepare this account, okay. So we understood what sales related items and customer related items will be taken to complete this account, okay. So first of all, we need to write the balance, yeah. So control account has two balances. Sometime on the question you will have debit balance, credit balance together. In this case, will be clearly identified which one is credit balance and which one is debit balance, okay. So debit balance will appear on the debit side and credit balance will appear on the credit side. So this is the format. So it is traditional ledger account format. Here we have date, detail and dollars, same three columns we have on the credit side, okay. So this side is debit side and this is credit side, okay. So great. First of all, we need to write the balance. So on the question we have balance. Here we have balances at 1st January 2023. Sales ledger control account, it is $14,940, okay. It is a debit balance mentioned on the question. So if it is not mentioned, then what to do? Then you will write balance on the debit side, okay, because it is a normal debit account. So you will record on the debit side, okay. So let us write the date first. 2023 January 1st. We will write here balance BD, okay. So here the amount is $14,940, okay. Great. Now we will check what are the related items, okay. Related item means customer related items or sales related items on the question. So one thing you need to remember, first of all, if we see accounts receivable is increasing for the transaction, then you will record on the debit side. So if accounts receivable is decreasing for any transaction, you will record on the credit side, okay. So here our first item is on the question credit sales. We have here 12,736. At the same time, we have cash sales $3,992. Okay, we'll talk about cash sales later. Let us talk about credit sales. Okay, credit sales. When business sold goods on credit, means Lucas sold goods on credit. In this case, what happened to trade receivable? Definitely it will be increased. Yeah, business current assets will be increased. So when it is increased, we will record on the debit side. Okay, so let us write here on the debit side. Date will be here, the last of the month, January 31st. Okay, so we will write here sales. So here on the question, amount is $12,736. Okay, now let us come to the point cash sales. So cash sales will go to the cash book. Okay, it has no relation to the trade receivables because goods sold in cash and business received money in cash. Okay, so this transaction will be appeared in the cash book. Okay, so if you see cash sales on the questions, you do not take it. Okay, you have to skip this transaction. Now you might be thinking, why is this transaction given? Just to check your understanding. So good, we have next transaction here. Credit purchase, we will not take it. Return to credit supplier. Okay, we will not take it. Returns from credit customers. Okay, here we have $920. Okay, so already we know customer related items we will take to the sales ledger control account. Okay, so when customer returns goods, that means the value of customer means accounts receivable will be decreased. Yeah, so when it is decreased, we will record on the credit side. Okay, so let us write the date first, 2023 January 31st. Okay, so you write here returns inwards. So here we have 920. Okay, so many of you don't know returns inward. So return inwards means sales returns. Okay, don't be confused. So then we have here cash received from credit customers. Okay, it is $685. Okay, customer related items definitely we will take. Okay, so when we will take money cash from the customer, the value of customer will be decreased. Yeah, so we will record on the credit side. Okay, so let us write here same date, January 31st. We will write here cash. So here it is $685. Okay, great. Then we have here on the question bank transfers received from the credit customer $10,620. Okay, customer transferred money to our bank. Okay, to Lucas bank account. Okay, so that means the value of customer will be decreased. That means value of trade receivable, which is a current asset, will be decreased. Okay, so we will write on the credit side, and as we receive this money by bank, we will write here bank on the detail column. Okay, so let us write here date January 31st. We will write here bank, and the amount is $10,620. Okay, finished. So what do we have next? Bank payments to credit supplier. It is not related to sales ledger control account. Then we have here irrecoverable debts written off $140. Irrecoverable debts or bad debts, same thing. So irrecoverable debts, it is related to trade receivables or accounts receivables. Okay, so what happened? The customer could not pay money. Then business considers, Lucas considers this $140 as irrecoverable. Okay, because Lucas understood that this customer will never pay this money. Okay, maybe later it will be recovered, but that is different. But right now this money will not be recovered. Okay, so it is an expense. So for this amount, the value of trade receivable will be decreased. Yeah, in this case we will record on the credit side. Okay, so let us write here the date first. 31st, irrecoverable, $140. Okay, great, finished. We have our next transaction here, discount received. Okay, discount received is related to the purchase ledger control account, but if you have discount allowed, we will record. Okay, then here contra entry is $180. Okay, contra entries are entries which appears both sales ledger control account and purchase ledger control account. So this entry appears on the debit side of purchase ledger control account and on the credit side of sales ledger control account. You need to note down. Okay, so here we are doing a sales ledger control account. We will record it on the credit side. So let us write same date, 31st, contra $180. Okay, then what we have here, interest charged on overdue purchases ledger account $166. Okay, this is not related, it is purchase ledger control account related item. Okay, so here we finished, we wrote all of the items here. Now we need to balance it. Okay, because it is a requirement on the question. So sometimes you will have the closing balances on the question, maybe 2, maybe 1. Okay, so depends. If you have closing balance on the question, in this case you have to write the opposite way. Okay, so debit balance you will write on the credit side as balance CD, and credit balance you will write on the debit side as same balance CD. Okay, so here in these questions we do not have closing balances, so we will now balance, we'll figure out balance CD. Okay, so how to figure out? So we need to compare debit dollar column to the credit dollar columns. Okay, we need to check which column is greater in terms of value. So here we see debit column is much greater than credit column. Yeah, so we will sum up the debit column first. Okay, so here if we add these two amounts, we get $27,676. Okay, now we will take this amount to the opposite column, means the credit column. Okay, so here same amount, $27,676. Okay, now we will minus this all amounts from this total. Okay, so what you get if we subtract, we get here $15,131. Okay, so this is our closing balance, means balance CD. CD stands for carried down. Yeah, so here the date for balance CD will be last day of the month, 31st January. Now we need to bring down the balance. Okay, so here on the credit side we have balance CD. Above the total we will write balance BD. On the opposite side below the total. Okay, this is same always. Okay, so let us write here money first, $15,131, and here on the detail column we will write balance BD, stands for brought down, and date will be the first day of next month. Here month ended on 31st January 2023, and next financial year, financial month will be started on 2023 February 1st. Okay, so this is how you have to prepare sales ledger control account. I hope you understood. In your exam you can answer this type of questions correctly.